Hello and welcome to gotstockz. Today is June 3rd, 2024. We're going to be talking about VERTIV, symbol VRT. We're going to look at some of the fundamentals, a little bit about the stock, and then we're going to look at some charts for some potential entry points, potential buy areas. So here we go. So what we are looking at right now is, this is their website, VERTIV.com. So let's go up into their products and services. As you can see, the critical power, all the different things that are listed here. When you go to the website, you can scroll through each one of these and it shows you this company is amazing and they offer a lot. VERTIV Holdings designs, manufactures, and services critical digital infrastructure, technologies, and life cycle services for data centers, communication networks, and commercial and industrial environments. Their market cap is $35.97 billion. Right in here, this is their market cap. Their PE ratio, this is their trailing PE ratio, which is 91.53. Now they also have a forward PE ratio, it's a little over 40. Now also, when you look at the ex-dividend date is March 18th of 2024. Their average volume is 8.8 million shares traded per day. Now today's volume, as you can see, was a little bit higher. It was 9.6, and they also closed down. Now they've been under pressure for the last couple of days. We're going to look at the technical analysis in the charts and look at the volume patterns to see what that actually means. This is the actual breakdown of held by insiders, and then there's 84.24% held by institutions, and also the float is held by institutions, and there are over 1,004. That's a number of institutions that are holding shares in this company. That's pretty substantial. Right now we are looking at the top 10 institutional holders. So the FMR LLC, that's a Fidelity. They currently are showing 35 million. We have the Vanguard Group at 33 million. BlackRock has 27 million. These are the top 10 institutional holders, and there's over 1,000 of these. So currently, we are looking at a 1-year chart. Each candle represents a day. The white line represents the 10-day, the purple line represents the 21-day, the green line represents the 50-day, and the red line represents the 200-day exponential moving average. The 52-week low for this stock is $19.39, and the 52-week high is $109.27. So the stock has had a nice run in the past year. So what we want to look at are some support and resistance areas of what's going on with the stock. And we want to look at some of the characteristics of the stock to see how it's traded in this past year. And then we're going to dial it into where it's trading at right now and some good areas of potential entry points. So for example, if we look back here when the stock gapped up, look at the volume that it gapped up on, a tremendous amount of volume, and the stock consolidated for a couple of weeks, came back, touched the 10-day moving average. These are good entry points. And then it pushed a little bit higher. It pulls back down to the 10 and the 21-day moving average. Strong stocks that are healthy, that are in positive uptrends, they will tend to trade in their 10 and their 21-day moving average. And occasionally when the market gets under pressure and the whole market pulls back, they can break these areas and pull back to their 50-day moving average. As you can see, the next pullback, it went down to the 50-day, it held that and then continued its upward rise for the next few months. In the past year, it's only touched the 50-day moving average. 1, 2, it almost touched it here. 3, It did touch it here, and now it's closing in on it here. Let's back it out right to here and take a look at these areas, and we're going to draw some support and resistance, and this also will act as a support area. This will give us a support if it comes down to here. This will give us support. If you look at this area right here, it forms a doji. It closes above the 50-day moving average. On its last earnings report, the estimate was 34 cents. They reported 43 cents. That was April 24th of 2024. The stock gaps up. But what I want you to look at, so the average volume of this stock is 8 million plus. That's how many shares trade per day. But when we look on the day of earnings, it traded 28 million. So substantially a lot more. The stock does gap up, but how it acts on the gap up, it's not a gap and go. The stock gaps up and then it sells off most of the day on substantially higher volume. That is divergence. It's positive, stock gaps up, but it's also negative that it sold off most of the day. The stock opens at this area right here, and it pushes all the way to there, and it closes at the bottom of the range. So when the stock opened, it pushed a little higher and sold off most of the day, and then the buying power came back in towards the end of the day. But when we look at that and we come down here and look at this volume characteristics, that is a red flag. So you have to be on guard, place your stops. If you're trading this or if you're investing in this for a long period of time, that's great. But if you're trading this, you want to put your stops in. And even if you're investing for long term, you can always get back in the stock, because when this thing makes a major correction, you can lose a lot of your profits real quick. What takes several months, even sometimes a year to gain, you can lose in a few days. And let's look at the positive and the negative aspects of what's going on in the last 2 days of this stock. When it peaked out at 109.29 the next day, right here, you can see this day was showing that the volume is starting to pick up in this area. So the volume is picking up, the stock is selling off. Now the volume does decrease on these 2 days, but then the last 2 days right in here, the volume picks up substantially. And we want to look at the actual volume. Yesterday was 17.9 million. The volume today was 9.6 million. The average volume's a little over 8 million. So the volume is picking up. This would be a negative aspect. When you look at the type of candle that it formed in the past couple of days, right here and right here, look at the bottom of these candles. You can see they have long wicks. This is actually a positive indication of when the stock reached those lower levels, the buying came into the stock and the bulls took over and are pushing the stock back up. They're having a hard time knocking this stock down. You want to look at both sides of that. You don't want to base your opinions on what you think about the company. You want to use fundamental analysis. You want to use technical analysis when making your decision. If we look at the top right here of the wick of that candle and we draw a support line going across, 94.39 is going to give us a support area. As you can see, it provided support for about 6-7 days right in through here. You can see this whole area right through there held support. It's currently trading below the 10-day and the 21-day moving average. Let this stock give us some more signals of positive influence. Negative influence is starting to come in, and we want that to go away. And we want to see positive influence and a reason to get into this stock. Potential entry point would be the 94.39, or you come down to the 50-day moving average and you're looking at 90.45. These are potential buy points, but I'm currently going to wait a few days to see how this plays out, if it's going to have additional pressure. Let's say the market starts to pull back. This stock can easily pull back to the 50-day, and it can easily pull back to this support area of $81.90. And if it breaks that area, the next level of support is going to be $72.58. But we want at least 3 positive catalysts to get into this stock. So currently, we're going to put this one on hold and see how it plays out. If it can start trading above the 10 and the 21-day moving average, then we can look at some potential buy points in those areas. And that will complete our analysis of VERTIV Holdings. Thank you for tuning in. I hope this analysis helps. Please always remember that. Put your stops in, because if you get stopped out, you're protecting your portfolio, you're protecting your investment, and you can always get back into the stock. But if the stock washes out, you can lose 20, 30, 40% of your stock in several days, and takes sometimes months to get that back. So manage your risk. Thank you. God bless, and have a great day. We'll see you on the next one.